Question 1. Which of the following is the primary difference between first-party and third-party coverage in a cyber insurance policy? A. First-party coverage includes protection against privacy liability, while third-party coverage only covers data breach incidents. B. First-party coverage protects the policyholder's own assets, whereas third-party coverage protects the policyholder from claims made by others. C. Third-party coverage is typically less expensive than first-party coverage due to low risk exposure. D. First-party coverage addresses only malware attacks, while third-party coverage includes a wider range of cyber risks. Answer: B. Explanation. First-party coverage refers to the protection provided to the policyholder's own assets, such as covering the costs related to data breach recovery, business interruption, or cyber extortion. Third-party coverage, on the other hand, provides protection against claims made by others, such as privacy lawsuits or regulatory fines following a data breach that affects third parties. This distinction is fundamental for understanding how cyber insurance policies manage risk and liability. For instance, first-party coverage might cover direct expenses like data recovery or ransomware payments, while third-party coverage would address liabilities stemming from the policyholder's responsibility to others. Question 2. Scenario: Mr. Thompson's e-commerce company experienced a ransomware attack which resulted in a significant business interruption. Mr. Thompson immediately reported the attack to his cyber insurer, who responded with a request for an extensive audit of the company's cybersecurity measures. Which of the following is the most likely reason for this request? A. To assess whether Mr. Thompson's company qualifies for discounts due to proactive cybersecurity measures. B. To determine if the attack was covered under his cyber insurance policy based on the company's security posture. C. To identify whether the company had complied with industry best practices to prevent the incident. D. To evaluate the amount of coverage needed for future incidents and adjust premiums accordingly. Answer: B. Explanation. The request for an audit likely stems from the insurer's need to evaluate whether the company's cybersecurity posture was adequate, which influences whether the ransomware attack is covered by the policy. Insurers typically assess the risk mitigation measures taken by the policyholder to determine the claim's validity. In this case, the insurer needs to verify whether the company had appropriate cybersecurity controls in place, such as firewalls, encryption, or employee training, which would influence the claim process. If the company neglected essential measures, the insurer may reduce or deny the payout. While discounts for cybersecurity measures and policy adjustments may also occur, they are secondary to validating the coverage under the policy, especially in cases of high-impact events like ransomware attacks. Question 3. Which of the following is a key consideration when assessing the impact of a cyber attack on a business's financials for cyber insurance claims? A. The cost of replacing hardware and software that was damaged by the attack. B. The impact of reputational damage and the potential loss of customer trust. C. The amount of data lost, which will always be compensated regardless of the incident's cause. D. The number of employees involved in mitigating the cyber attack. Answer: B. Explanation. Reputational damage is a significant factor in evaluating the financial impact of a cyber attack, especially for businesses that rely heavily on customer trust. A breach of personal data or a ransomware attack can lead to a loss of customers, legal penalties, and long-term damage to the business's reputation, which may not be fully covered by cyber insurance policies, while hardware and software costs. Option A, and employee involvement. Option D may be considered. The broader financial loss stemming from reputational damage is often one of the most impactful elements for businesses, especially in the long term. Many cyber insurance policies are designed to mitigate these financial risks, but reputational harm is harder to quantify and recover from. Option C, data loss, is not necessarily covered directly by insurance unless specified in the policy and the cause aligns with covered incidents. Question 4. Which of the following best describes the role of incident response plans (IRPs) in the context of cyber insurance? A. IRPs are primarily used to identify the financial costs of a cyber attack. B. IRPs provide a systematic approach to recover data and ensure business continuity after an incident. C. IRPs help insurers determine the coverage limits for cyber incidents. D. IRPs are not relevant to cyber insurance claims as they focus on external threats only. Answer: B. Explanation. Incident response plans (IRPs) are critical for effectively managing and containing a cyber attack. These plans outline the steps to take in the event of a breach, such as isolating affected systems, notifying stakeholders, and recovering data. Cyber insurance policies often require that the insured has an IRP in place to ensure quick recovery and minimize losses. The presence of a robust IRP can improve the chances of claim approval by demonstrating preparedness and efficient response to mitigate the attack's impact. While the other options focus on aspects like costs or coverage determination, the core purpose of IRPS is to manage the immediate actions following a breach and restore business operations. Question 5. Which of the following factors is most likely to increase the cost of cyber insurance premiums for a business? A. The business's implementation of a comprehensive cybersecurity training program for all employees. B. The business's lack of documented cybersecurity practices, leaving it vulnerable to attacks. C. The use of multi-factor authentication for all employees accessing sensitive data. D. The business's regular updates to its software and operating systems to patch vulnerabilities. Answer: B. Explanation: a lack of documented cybersecurity practices or failing to adopt basic cyber hygiene measures can significantly increase the cost of cyber insurance premiums. Insurers evaluate the risk exposure based on a company's cybersecurity posture, and businesses that fail to demonstrate proactive measures are considered high risk, while options A, C, and D describe actions that reduce the likelihood of a cyber attack, which typically lower premiums. The absence of policies and procedures, especially in the face of escalating cyber threats, makes the company a higher liability for insurers. As a result, insurers may charge higher premiums to offset the risk of potential claims. Question 6. Scenario: Mrs. Miller, the IT manager at a financial services firm, discovers that sensitive customer data was stolen in a phishing attack. The company's cyber insurance policy includes data breach coverage, but the insurer requests that Mrs. Miller provide specific details on the company's employee training efforts before approving the claim. Why is the insurer requesting this information? A. To determine if the data breach could have been prevented through more effective employee training. B. To ensure the company is following all relevant data protection regulations. C. To evaluate whether the breach has reached the legal threshold for a claim. D. To identify whether the company can file a claim under the network security portion of the policy. Answer: A. Explanation: the data breach coverage in the cyber insurance policy typically covers the costs related to a breach of sensitive information, but insurers often assess whether the breach could have been avoided through proactive measures such as employee training. Phishing attacks are a common vector for data breaches, and proper training is crucial in preventing such attacks. Insurers may require evidence of training programs to evaluate the degree of negligence or whether the insured took reasonable precautions. If the company failed to train employees adequately, the insurer may argue that the breach was preventable, potentially reducing the payout or denying the claim, while compliance with regulations, option B, and the legal threshold, option C, are important. The primary concern in this scenario is whether the breach could have been mitigated by employee awareness. Question 7. Which of the following types of coverage is most likely to be included in a cyber insurance policy to cover losses related to a ransomware attack? A. Privacy liability coverage. B. Cyber extortion coverage. C. Business interruption coverage. D. Network security coverage. Answer: B. Explanation. Cyber extortion coverage is designed to address the costs associated with ransomware and other forms of cyber extortion, such as ransom payments and associated legal, public relations, and IT recovery expenses. This coverage specifically targets threats where cybercriminals demand payment to restore access to data or systems, while options A, C, and D may cover other aspects of cyber risks like privacy breaches, operational losses, and security vulnerabilities. Cyber extortion coverage is tailored to address the specific financial and operational impacts of a ransomware attack. Question 8. Which of the following is most likely to be an exclusion under a typical cyber insurance policy? A. Losses due to phishing attacks. B. Losses from the failure to apply software updates and patches. C. Data recovery costs after a cyber attack. D. Reputational damage caused by a data breach. Answer: B. Explanation. Many cyber insurance policies have exclusions related to the failure to maintain basic cybersecurity practices. This includes not applying security patches or software updates in a timely manner, which can leave systems vulnerable to attack. Insurance policies are designed to mitigate the impact of incidents that occur despite the insured taking reasonable precautions. However, if the insured's negligence, such as failing to patch vulnerabilities, leads directly to a breach, the insurer may exclude coverage for those losses. In contrast, phishing attacks, option A, data recovery costs, option C, and reputational damage, option D, are typically covered depending on the specifics of the policy. Question 9. Which of the following regulatory frameworks is most directly related to managing healthcare data and its protection in the context of cyber insurance? A. General Data Protection Regulation (EDR). B. Federal Information Security Management Act (FISMA). C. Health Insurance Portability and Accountability Act (HIPAA). D. California Consumer Privacy Act (CUIA). Answer. C. Explanation. HIPAA, Health Insurance Portability and Accountability Act, is the regulatory framework specifically designed to protect healthcare data. It mandates stringent security and privacy measures for the handling of protected health information (FI) and requires businesses to adopt practices to secure this data against cyber threats, while GDPR option A, FISMA option B, and CCPA option D are important in their respective domains. General Data Protection, Federal Cybersecurity, and Consumer Privacy (HIPAA) directly addresses the healthcare industry's requirements for data protection, making it the most relevant regulatory framework for cyber insurance policies covering healthcare data. Question 10. Which of the following is a key component of a business continuity plan (BCP) that is often required by cyber insurance providers? A. A list of employees and their contact information in case of a cyber attack. B. A strategy to manage social media communication during a cyber attack. C. A defined process for maintaining or restoring critical business functions during and after a cyber attack. D. A schedule of annual cybersecurity audits and assessments. Answer. C. Explanation. A business continuity plan (BCP) outlines the necessary procedures to maintain or restore critical business operations during and after cyber attack or other disruptions. It includes detailed steps for ensuring that key services and systems remain operational or can be quickly restored, which is a crucial part of managing business risk. While options A, B, and D may support the BCP, the core element is the process for maintaining or restoring critical functions, as this directly impacts a company's ability to recover from a cyber attack and resume normal operations as soon as possible. Cyber insurance policies often require that companies have an up-to-date BCP to qualify for full coverage. Question 11. Which of the following is the most common exclusion in cyber insurance policies related to intellectual property theft? A. Losses due to a failure to protect intellectual property under patent laws. B. Losses arising from cyber extortion demands related to intellectual property. C. Losses from the theft of intellectual property during a network security breach. D. Losses from intellectual property infringement lawsuits following a breach. Answer A. Explanation. Cyber insurance typically excludes coverage for losses resulting from a company's failure to adequately protect intellectual property under patent or copyright laws. These protections are considered a part of regular business operations and are not typically covered under cyber insurance policies. On the other hand, losses arising from cyber extortion option B or theft of intellectual property during a breach option C are usually covered if they result from a cyber attack. Intellectual property infringement option D could be part of a separate legal liability policy, but most cyber insurance policies focus on recovery after an attack. Question 12. Which of the following cybersecurity controls is typically required to reduce the likelihood of a successful phishing attack and therefore lower cyber insurance premiums? A. Regular software updates and patching. B. Employee cybersecurity training and awareness programs. C. Active monitoring of third-party vendor security. D. Purchasing a higher deductible on the policy. Answer. B. Explanation. Employee cybersecurity training is one of the most effective ways to reduce the likelihood of successful phishing attacks. Phishing is often successful because employees fall victim to malicious emails, so educating them on identifying phishing attempts helps to mitigate this risk, while software updates option A and vendor monitoring option C are important for overall cybersecurity. Insurers typically emphasize employee training as a key preventative measure against phishing. A higher deductible option D does not directly influence the risk reduction strategy. Question 13. In the context of cyber insurance, what is meant by network security coverage? A. Coverage for breaches related to physical security of servers and data centers. B. Coverage for damages resulting from a security failure within a company's IT infrastructure. C. Coverage for the financial losses incurred by clients due to data exposure. D. Coverage for reputational damage after a cybersecurity incident. Answer B. Explanation. Network security coverage refers to protection against damages caused by a security breach or failure within the company's IT infrastructure. This includes incidents such as hacking, malware, and denial of service (DOS), attacks that exploit vulnerabilities in the network. Option A refers to physical security concerns, while option C addresses client-facing losses, and option D focuses on reputational damage, none of which are primarily covered by network security. Question 14. Which of the following best describes the role of third-party vendors in cyber insurance? A. They are never covered under cyber insurance policies. B. They are only covered if their systems were compromised in a cyber attack. C. They are often subject to specific third-party risk management provisions in the policy. D. They are automatically covered as part of the cyber insurance policy for the primary insured. Answer C. Explanation. Third-party vendors, especially those with access to sensitive data or systems, are often subject to third-party risk management provisions in cyber insurance policies. Insurers may require businesses to ensure that vendors have adequate cybersecurity measures in place. Option B is incorrect because coverage for vendor compromise may depend on the policy, but third-party risk management is usually explicitly outlined. Options and D are also incorrect as vendors' risks need to be managed separately and not all policies automatically cover them. Question 15. Scenario. A company experiences a data breach and the affected customer data includes financial information. The company's cyber insurance policy provides coverage for regulatory fines. Which of the following regulatory requirements would most likely trigger this type of coverage? A. The company fails to notify the affected customers in a timely manner as required by law. B. The company's IT department did not patch vulnerabilities in time to prevent the attack. C. The company misclassified the type of data involved in the breach. D. The company was found to have misused customer data, violating privacy regulations. Answer A. Explanation. Regulatory fines typically arise when a company fails to comply with data protection laws, such as not notifying customers in a timely manner after a breach, which is a violation of privacy laws like the General Data Protection Regulation (EDR) in Europe or similar laws in other regions, while failure to patch vulnerabilities, option B, or misclassifying data, option C, may affect the company's liability. Regulatory fines are generally tied to non-compliance with notification and reporting requirements, option A. Misuse of data, option D, would likely lead to legal action but not necessarily trigger insurance coverage under regulatory fines. Question 16. Which of the following is the primary goal of a cyber risk assessment? A. To identify the financial cost of a cyber attack. B. To identify and evaluate potential cybersecurity threats and vulnerabilities. C. To determine whether an organization qualifies for cyber insurance coverage. D. To implement a fixed set of security measures across the organization. Answer B. Explanation. The primary goal of a cyber risk assessment is to identify and evaluate the potential cybersecurity threats and vulnerabilities that an organization may face. This allows the company to understand where it is most at risk and take measures to mitigate those risks before they lead to an attack, while financial costs, option A, and insurance qualification, option C, are important considerations. The core purpose of the assessment is to identify risks so they can be addressed with appropriate defenses. Option D is more about implementing security measures, which happens after the risks are assessed. Question 17. Which of the following types of cyber insurance claims would most likely be covered under business interruption coverage? A. Losses resulting from a data breach that exposed customer data. B. Losses from an outage of critical IT infrastructure caused by a ransomware attack. C. Legal fees resulting from a privacy violation lawsuit. D. Costs of sending notifications to affected individuals after a breach. Answer B. Explanation. Business interruption coverage is designed to cover losses caused by an outage or disruption to essential business functions, such as IT infrastructure, due to cyber events like ransomware attacks. This includes the financial losses from halting operations during the recovery process. Options A, C, and D focus on other aspects of cyber incidents such as reputational damage, legal costs, and notification expenses, which would be covered under other parts of the policy, but business interruption specifically addresses loss of income or operational downtime. Question 18. Which of the following is a key benefit of cyber insurance when it comes to third-party liability? A. Coverage for the cost of patching vulnerabilities in third-party software. B. Coverage for the financial losses experienced by customers due to a data breach. C. Coverage for the cost of implementing cybersecurity training for third-party vendors. D. Coverage for reputational damage caused by the actions of third-party contractors. Answer: B. Explanation. Third-party liability coverage in cyber insurance policies typically includes coverage for financial losses experienced by customers or other stakeholders due to a data breach or cybersecurity failure. This could include costs related to notifying affected individuals, providing credit monitoring, and handling lawsuits or settlements, while options A, C, and D focus on actions or expenses related to risk management. Third-party liability coverage specifically addresses the financial impact on external parties, e.g., customers or partners, from a cyber incident. Question 19. Which of the following is the main purpose of social engineering coverage under cyber insurance? A. To protect the company from legal consequences of social media misuse. B. To cover losses resulting from fraudulent communications designed to manipulate employees into revealing sensitive information. C. To cover the cost of training employees to recognize social engineering tactics. D. To provide coverage for reputational damage from social media posts. Answer: B. Explanation. Social engineering coverage is designed to cover losses resulting from fraudulent schemes such as phishing, pretexting, or baiting that manipulate employees or other individuals into divulging sensitive company information, transferring money, or granting access to systems. Options A, C, and D refer to different aspects of risk management or reputational concerns, but social engineering coverage specifically addresses financial losses tied to scams or fraud. Question 20. What is a common limitation of cyber insurance policies related to cyber extortion? A. Coverage for ransom payments is typically limited to a certain maximum payout. B. Coverage for financial losses caused by data breach is usually excluded. C. Cyber insurance policies rarely cover reputational damage from extortion. D. Coverage is restricted to extortion threats related to intellectual property. Answer: explanation. A common limitation of cyber insurance policies is that coverage for ransom payments related to cyber extortion, e.g., ransomware attacks, is often subject to a payout cap. Insurers may limit the maximum amount they will cover for ransom either as part of the policy's overall coverage limits or through specific exclusions, while reputational damage, option C, and exclusions related to data breaches, option B, are common in cyber insurance. The primary limitation for cyber extortion claims is usually related to payout limits, option A. Option D is incorrect, as cyber extortion can target various types of data, not just intellectual property. Question 21. Which of the following would NOT typically be covered under a cyber insurance policy? A. Losses from an employee clicking on a phishing email and causing a data breach. B. Costs of restoring data lost during a ransomware attack. C. Legal fees resulting from a lawsuit by a competitor following a data breach. D. Costs associated with notifying affected individuals about the data breach. Answer: C. Explanation. Legal fees from a lawsuit by a competitor following a data breach are generally not covered under cyber insurance, as this is typically considered a business dispute rather than a direct consequence of the cyber event. However, losses from phishing attacks, A, restoring lost data, B, and notification costs, D, are usually covered under cyber insurance policies. Question 22. Which of the following is an example of first-party coverage under cyber insurance? A. Payment of a ransom to a hacker in a ransomware attack. B. Legal costs to defend against a lawsuit due to a data breach. C. Financial losses suffered by customers as a result of the breach. D. Coverage for the cost of restoring business operations after a cyber attack. Answer: D. Explanation. First-party coverage refers to coverage for losses suffered directly by the insured organization. This includes costs like restoring business operations after a cyber attack. Payment of ransom, A, and legal defense costs, B, typically fall under first-party coverage, but customer financial losses, C, would be covered under third-party liability. Question 23. Which of the following is NOT typically a requirement for an organization to qualify for cyber insurance? A. Having a clear data breach response plan in place. B. Conducting regular cybersecurity training for employees. C. Implementing a set of cybersecurity best practices such as using strong passwords and encryption. D. Hiring an external cybersecurity firm to monitor all network activity 24/7. Answer: D. Explanation. while hiring an external cybersecurity firm. D may improve security. It is not typically a requirement for cyber insurance. Insurers typically require the implementation of strong cybersecurity best practices. C, employee training. B, a response plan as part of the application process. Question 24. Which of the following scenarios would most likely trigger a cyber insurance claim under the data breach coverage? A. A company is found liable for a breach of contract due to failure to protect customer data. B. An employee's laptop is stolen, but no sensitive data is on the device. C. A hacker gains access to sensitive customer information and the company is required to notify customers. D. A company suffers reputational damage due to public news about a hacking incident. Answer: C. Explanation. Data breach coverage under cyber insurance typically covers the costs of notification and other related expenses when sensitive customer information is compromised. C. Scenario which as contract breach relates to business contracts and is not directly covered under data breach coverage. A stolen laptop with no sensitive data. B. And reputational damage. D. May not trigger a data breach claim either. Question 25. What is the primary difference between cyber insurance and technology errors and omissions? Tech-EO insurance. A. Cyber insurance covers business interruption losses, while Tech-EO only covers financial losses. B. Tech-EO insurance covers product liability issues, while cyber insurance focuses on data breaches. C. Cyber insurance is typically more expensive than Tech-EO due to its broader coverage. D. Tech-EO insurance is more focused on liability for professional services, while cyber insurance covers data breaches and other cyber incidents. Answer: D. Explanation. Tech errors and omissions (EO) insurance is focused on protecting businesses against liability related to the failure of products or services provided to clients, while cyber insurance primarily focuses on data breaches and other cyber-related risks. Product liability (B) is typically not part of cyber insurance, and business interruption losses are more common in cyber insurance than in Tech-EO policies. Question 26. Which of the following actions would most likely reduce a company's cyber insurance premiums? A. Increasing the deductible on the policy. B. Decreasing the frequency of employee cybersecurity training. C. Reducing the number of employees with access to sensitive data. D. Implementing a weaker password policy to simplify access controls. Answer: C. Explanation. Reducing the number of employees who have access to sensitive data. C. Can reduce the risk of a breach and is often considered a risk management strategy that insurers favor, potentially lowering premiums. Increasing the deductible may lower premiums but does not directly reduce risk. Decreasing employee training. B. Or weakening password policies. D. Would likely increase risks and premiums, not reduce them. Question 27. Which of the following is the main focus of cyber insurance policies offering privacy liability coverage? A. Coverage for the costs of recovering lost or encrypted data. B. Coverage for the costs of notifying individuals affected by a data breach. C. Coverage for the cost of responding to regulatory investigations following a breach. D. Coverage for third-party claims related to a company's violation of privacy laws. Answer: D. Explanation. Privacy liability coverage under cyber insurance is primarily focused on third-party claims related to a company's violation of privacy laws such as the GDPR or California Consumer Privacy Act (CCPA), especially when customer or client data is exposed or misused. Notification costs B. Breach response A. And regulatory investigations C. would typically be covered under different parts of the policy. Question 28. What is a common requirement for a business to qualify for cyber insurance regarding its data security practices? A. The business must ensure all data is stored offline, disconnected from the internet. B. The business must use end-to-end encryption for all sensitive data. C. The business must purchase cybersecurity software from an insurer's recommended vendor. D. The business must conduct regular internal cybersecurity audits and vulnerability assessments. Answer: D. Explanation. Most cyber insurance policies require businesses to conduct regular internal cybersecurity audits and vulnerability assessments. D. To ensure that they are proactively identifying and mitigating risks. While encryption, B, and cybersecurity software, C, are important, they are not always mandatory. Storing data offline, A, is generally impractical for most businesses. Question 29. Which of the following is a key factor insurers consider when determining the premium for cyber insurance? A. The number of years the business has been operating. B. The industry the business operates in. C. The type of devices employees use, e.g., laptops, desktops. D. The reputation of the business within its industry. Answer B. Explanation. The industry in which a business operates, B, is a key factor in determining cyber insurance premiums because industries like healthcare or finance face higher risks of data breaches and therefore may have higher premiums. The reputation of the business, D, may influence the potential impact of a breach but does not directly affect premium pricing, and factors like device types, C, are less significant. Question 30. Which of the following actions is most likely to reduce the risk of a successful ransomware attack on a business? A. Installing antivirus software and performing regular system updates. B. Backing up critical data to an external storage device. C. Educating employees about phishing scams and the importance of strong passwords. D. All of the above. Answer D. Explanation. All of the listed actions A, B, C contribute to reducing the risk of a successful ransomware attack. Antivirus software and updates A help to prevent malware. External backups B reduce the impact of data loss and employee education. C reduces the likelihood of phishing leading to an attack.